The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the November 5th wonderful Wednesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes. And I believe that we should never, ever be prisoners of our past, but instead pioneers of our future. So let's make sure that you and I, that we do everything that we can to pioneer through our day. And as we begin our day, let's always remember that each day, each and every day, each morning that you and I wake, the universe awakens itself to prepare itself to provide us with wonderful gifts. And for me, the first gift each morning, well, that's the gift of your presence. Look, I'm here to serve you. So feel free to dial in at 877-927-6648. Internationally, that number is 727-445-1044, because I would love to hear from you. Hope everyone had a great Tuesday evening. It is wonderful Wednesday. This is Tiger Financials Network. I'm Steve Rhodes, and welcome to the show. Right now, we got Dow Futures trading up 98 points. They're trading out at 17,403. S&P Futures up 12.5, trading out at 2,018. That's bullish, almost very bullish. The NASDAQ futures up 28 points. That's trading out at 41.71. Russell 2000 up 10 points. There's King dollar on the move this morning, up 428 ticks, trading out at 87.52. That must mean we have some movement in the currency markets, and we most certainly do, even in the hard currency markets. We got Goldilocks trading down $23. That's off its session lows as of this morning. It's trading out at 11.44. Silver down 58 cents at 15.37. Light sweet crude, that's trading positive. That's trading up 0.5%, up 37 cents right now. Natural gas up in nickel. Looks like natural gas getting ready to pull back just a bit here as it runs into some resistance. A quick peek across the globe out here. We're going to find that over in Germany, they're having a good old party over there. Of course, at that GOP party in it's Oktoberfest as well. So why shouldn't they have a party? Up 150 points, up 1 6/10%. It's trading out at 93.17. FTSE up 69 points. That's trading at 65.23. Nikkei was up 74 last night. Hang Seng off 150, and the Shanghai down 12. All righty, where do we begin? I guess where we have to begin today is we have to begin by taking a look at the futures, right? There's a lot to look at. So let's start off by taking a look at the futures. Let's take a look at let's do it a couple of different ways. First, let's look at the daily chart out here for the NASDAQ. Now, what do we know about the NASDAQ? Number one, what we know, NASDAQ is above its B point. It's September 19th swing point. That swing point high, 41.1875. You're trading out at 41.7050. What is the NASDAQ trying to do? Well, it's trying to complete at least a one-to-one A to B equals CD to the upside out here. So if the markets continue to resume higher, which I have reason to say, hey, we should be cautious. Yes, even me with those big bullhorns, I say we should be cautious here. However, if the market does continue to motor higher, 43.93 becomes your first target out there. Now, that's on the daily chart for the NASDAQ. Are there any reasons to be cautious out here? Well, let's step down a few notches. Let's go take a look at a 30-minute chart and then back our way down. What do we know about the 30-minute chart? Well, yesterday, when we were on the air, well, I wasn't on the air, actually, during the Basel show at 11:30. We know that the NQ came down, formed a nice little hammer candle out here, as it was making its, looks like its fifth wave to the downside out here. Now, that's quite a wave. That's quite a move down. That was after making a seventh wave to the upside up here at about 10:30 in the morning. That was on, come on. It was doing that. It was making a seventh wave, was making a price relative strength divergent pattern out here, the whole 9 yards. It said, hey, some type of correction was in place. Well, we got that. We got an A to B equals CD down. We got a hammer candle that confirmed that pattern out here. And then what we have seen since, we've seen a nice move higher. What's that move higher? Just last time that the NASDAQ was up at about this level, it was making one of those price relative strength divergent patterns. So we're at a level of resistance. Just getting a 30-minute chart out here. You're at your fourth peak count on the way up here. Got a little bit of a bearish engulfing look. You're above a significant market profile level out here on the 30-minute chart. So as long as, hey, I didn't mean to make that disappear. I just meant to expand it out so we could take a look at it. So long as the NASDAQ stays above 4166.45, it's going to remain in bullish formation. Look, as long as it stays above 4155, you're at 4170 now, right? So that's a 15-point move to the downside. As long as it stays above that, then you're looking at something that remains relatively bullish. I would say the number to be watching this morning is going to be, that's assuming that we have just hit the peak, or maybe we hit the peak within the next half hour, 45 minutes, whatever that time period might be out here. But if, in fact, we start to see the NASDAQ on a 30-minute basis get below that 41.55, you probably come back and you test that hammer candle. That's where I would be, at least at this stage of the game. It's a swing point. It's a logical area. And then that's where you get a release of information. Now, what the market's been doing, if we go back and we actually just pull up this chart, so that's a 30-minute chart. Let me do this here. Let me come back to this. Let's take here's the 30-minute chart, just maybe spread out in black, all in black out here. I like that. If we take a look at that, what you can see here is ever since the Bank of Japan announcement back on Friday, you can see really just kind of a sideways movement out here. The bottom of the consolidation, I guess you call it the low of that hammer candle from yesterday out here. So we'll call that the bottom of the consolidation, around the 41.20 type level. So really just a sideways, narrow-banded move out here. And that's why I say you got to be a bit cautious. If we take a look at a 120-minute time frame chart, let's put that up on the screen. Now we're looking at the NASDAQ. We're looking at the NASDAQ because it's the lead dog out here. It has been strength. Not that the Dow is necessarily that weak, or the ES Mini, but the NASDAQ, pretty good spot for us to take a look at getting some information on the 120-minute time frame out here. Are there any real reversal patterns that are in place? Nah, we've really had some small-bodied candles since about 4 o'clock this morning out here. You would expect that. I suppose you would expect that. It's in bullish formation. It's up above its market profile high, 41.59 out here. Maybe it's a sixth, maybe it's a second peak count on the way up. No price relative strength divergence out here. So the 120-minute chart, not too shabby out here. So that looks okay. Let's go take a look at the 5-hour energy drink. And if we take a look at the 5-hour energy drink, the 300-minute chart out here, this says, hey, a little caution is warranted, because what we're in here is potentially where we're at, is you're potentially at that seventh peak to the upside out here. Now, it's a 5-hour chart. If I go ahead and get my crosshair out here, that would make things easy. Right now, that if we go a bit above, come on, if we go a bit above the high that came. Don't do that to me. Come on. Give me a little break here. Okay. You go above 4174.25. It's another 3 points. If you go above that in this in the next 5 hours, this one just ended at 9 o'clock. That means the next one doesn't end until 2 p.m. out here. So, the market can it just says caution. Just says caution, Will Robinson out here. Not that it's bearish or anything, just simply offering a word of caution. Could this be a pop and a drop? Yeah, it actually could. The market could continue to consolidate sideways and frustrate the heck out of most traders out there, or it could break away. It absolutely could break away, but my belief is that the market wants to consolidate, wants to put in a high like right around today. And then we've got that little frustration sideways move out there for most folks. But however, if I prepare you for a sideways consolidation move, and that's what comes out over the course of the next couple of weeks, you won't really be you won't be frustrated, will you? So we just got to set the right expectation out there. If we take a look at the daily chart, there's nothing bearish here to report on in a daily formation here of the NASDAQ. So that's what's going on inside of it. Let's take a look at let's go take a look at the Dow. Often overlooked out here. We do the same type of a thing out here. Let's take a look at a 30-minute chart pattern. What do we see on the 30-minute chart pattern? Moving to higher ground, doing it with less relative strength out there. Never a good sign. That can easily be resolved. The remedy there is just simply higher price. That will just simply resolve that pattern. However, on the 30-minute chart, it says, hey, caution, Will Robinson out here. So we're just paying attention to these chart patterns. We're not getting caught up into anything else other than just taking a look at these chart patterns out here. So you got a bit of caution on the 30-minute chart. We've got that on the NASDAQ. We've got that on the Dow out here, the Dow futures. If we take a look at the 120-minute time frame out here, see if there's any cautionary signs out here. Hey, guess what? There is. It's also been moving higher with less relative weakness, maybe in the 6th of 7th waves on the way up out here. So it also suggests a bit of caution out here. That's again, that's not a sign that says that you go ahead and sell it. You got to have reversal signals. You got to have all of that out there. But the 120-minute chart says, something to think about. The 5-hour energy chart, the 5-hour chart, the 300-minute chart out here, just like we were looking at, I think, inside of the NASDAQ. Get two potentially in that seventh wave on the way up. Again, we get a move just slightly above the high that came in here at 9 o'clock, which was 17,410. Here at 17,401. That's just simply going to extend itself, and that won't confirm until maybe, couldn't confirm until 7 p.m. this evening out here, using a 5-hour time frame out here. So that's what's going on inside of its chart. So I say we got some cautionary. We got the yield sign. Believe it or not, the yield sign is actually up when we take a look at the market. So I take a look at those three time frames. The daily time frame, there's no cautionary sign out here to speak of. In fact, it's been one heck of a strong move off that October 15th, October 16th low out there. So that's what's going on inside of the Dow. We might as well try to go ahead and finish this off, see if we can get some uniformity here by taking a look at the ES Mini as well. Here's a 30-minute chart. You're looking at you almost think I had the Dow chart up here, which I don't. But this is a very similar chart. Again, it's been moving higher. It's been doing it on less relative strength out here. A couple of high wave-ish type candles. That says the market has lost its way. It's lost its way. The last time that it was up here, I believe that was a seventh wave when it created that little price relative strength divergent pattern. Then we saw that move down into the 11:30 a.m. low yesterday. So we have a similar type of pattern that is setting up in the market. So it says, just be cautious. Now, inside the ES Mini, price pulling back to 2014, 4 points, no big deal. As long as price stays above 2011.75, 2012, let's call it, remains in bullish formation out there. Strong like bull. You start getting below 2012, that happens to also be your point of control. There's some other reasons to use that 2012 level, but 2012.75 happens to be your point of control, the level inside the ES Mini where traders are most comfortable with price, both sellers and buyers. You break below that, 2009 becomes the level to be watching inside of the 30-minute chart for the S&P futures contract. If we take a look at the 120-minute time frame here for the S&P futures, what's this going to show us? This is going to show us that you've made the fourth move higher out here, fourth wave higher. No price relative strength divergent pattern out here, but we will pay attention to that 30-minute chart. This remains in bullish formation out here. I say you got to clearly get above the 2019 level. What did this actually hit here? This got 2019.50. 2019.50. That suggests the ES Mini. That's going to have to say, because at 2019.50, I believe that just simply took out, yeah, it most certainly did. That took out that seventh wave pattern that John from Philly and I talked about yesterday out there. Stevie's son's going to have to evaluate this chart. I'll do that during the break. And then I'll report back to you as soon as we get back. 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Futures up 101. You know, caution, when I use the word caution is not the same as the word sell. So all I'm saying is caution. Caution is out there. I'm not saying to sell this market whatsoever. But caution says, there's some signals out here. And we'll have to wait. I'm going to reserve judgment on that 300-minute chart out here until I really see how the market trades for the next half hour. So as soon as the cash market opens, we see what all takes place out there. Then I can come back, and we'll certainly do that during the second hour here and take a look at some of those cautionary signals. Now, if we take a look at other things that are moving inside of the market out here, we've got to go take a look at the U.S. dollar index. We've got to take a look at the euro, the yen, the pound. So let's start off by taking a look at the U.S. dollar index out here. If I take a look at the U.S. dollar index, forget about that A to B equals CD to the downside, because that is not happening out here. We take a look at it. One, you've got an A to B equals CD to the upside that has completed, a small one. That small A to B equals CD pattern. I'd start down here with the low on October 15th as my A point. My B point out here on October 23rd side, the C point, this little retracement down in October 29th. The U.S. dollar index is made of 1 to 1.618, A to B equals CD to the upside. Let's take a look at expansion patterns now. The expansion of its most recent swing point high, which was October 3rd, down to the low where our 8-point began on October 15th. What you're also going to see is you've got a 1.272 expansion. Let me pull this back over here to the left. So we can see the expansion of that set of swing points. In fact, let me just turn off the retracement levels out here, make it a little bit easier for you to read. So get rid of the 0.382, the 618, the 0.786 out there. There we go. Just cleans up just a bit, makes it a little bit easier for you to take a look at. So what we can see here is you've got basically a butterfly expansion pattern, a 1.272 butterfly expansion inside of the U.S. dollar index. Now, no reversal signal here. This would be a logical area of resistance. You get a reversal candle. That means a bearish reversal candle tomorrow. Not that you couldn't have one today. The only thing you could really have today would be a shooting star. So you'd have to see the U.S. dollar index start to close towards its low out here, which is right around the 87.05. Then you could get a shooting star. That's the only bearish reversal signal that you could get today. You're trading at 87.53 or right around that level as we speak. Now, if price takes this area out, the U.S. dollar index will likely go ahead and make a move up to about the 88.32-ish level. That would form your 1.618 butterfly pattern out here. So the dollar should be up against pretty significant resistance. If it can take that out, then 88.32 becomes a number. And if the U.S. dollar index is able to do that, it says what we'll likely see is a continued movement lower inside of gold, inside of silver out here. Now, before we switch over to gold and silver, let's go take a look at what's actually going on inside the currency pairs. So let's go take a look at what's going on inside the euro as we speak, because this is where we'll get the largest signal. And inside the euro, interestingly enough, you see it's not really the euro that is totally causing the dollar to move higher out here. It's actually the Japanese yen. But if we take a look at the euro itself had formed a 1 to 1.272 A to B equals CD to the downside. It did that with a little hammer candle. That was yesterday, that was on Monday, November 3rd, and then a bullish engulfing candle. So what this is signaling to me is, I don't know if it's Mario Draghi, I don't know who it is, but somebody is trying to support the euro at these lows out here. Now, we're not even down there yet. Those lows being the low of that hammer candle, which is at 1.2442. This becomes a fairly significant level of support. How do you trade that? Well, I'd say you don't go short the euro. You might short the euro if you see a break of that hammer candle, meaning a close below that hammer candle. Remember, we're looking at a daily chart out here. But at this stage of the game, when we just took a look at the U.S. dollar index, its butterfly pattern that it has formed out here, it's not the euro, which is like 57%, I believe, of the weighting structure inside the U.S. dollar index. This thing hasn't cracked. You've gotten two reversal signals here yesterday and the day before, and as we take a look at its price movement to the downside, it's just testing. It hasn't even gotten down really to support levels out here. So that's what's going on inside of this currency pair. If we take a look at the Great British Pound, let's go do that. That's trading down just a bit. I don't know what I have turned on in my system. I'm glad you can't hear that in my ears out here. And if we take a look at the pound, what the pound has done is gotten back down to its lows from October 15th. That price level is 1.5866. It's gotten down there. It's tested that. If, in fact, the pound, now it's close to a hammer candle, but it's really not. It's got too much of a wick out here. But the pound's also trying to put in a bottom. You can't say the same for the Japanese yen. Or can you? We get back from this break, we'll see how the markets are going to open. We know they're going to pop. I don't know if they're going to drop, but we'll take a look at the Japanese yen when we get back. Right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization
customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 90 points, trading out of 17,474. S&P up 11, trading at 2,022. NASDAQ Composite up 21, trading out at 4644. Russell 2,000 up 6 points. She's trading at 1171. Gold off 23 bucks. Silver down 60 pennies. Leading the charge to the upside, it's the jazzy one. Jazz Pharmaceuticals up 5%, up $8.50. EOG Resources up about $4, 4%. Criteo, not sure if that's how you pronounce it, but it's how Stevie pronounced it, up 13% this morning. ticker symbol CRTO. EOG, I said Devon Energy is up as well. DVN, that's up $4. Coupons.com, COUP, up 28% out there. Alibaba up 3% this morning. Time Warner up a couple of bucks. To the downside, TripAdvisor taking a trip to the South Pole. She's off 14%, down $11.80. Stratasys, the 3D maker out here, that's off 10%. Stratasys, kind of an interesting chart out here because it's got a high volume high. Remind me to take a look at that stock chart, would you? We'll take a look at New Skin Enterprises. She's off 17% this morning. Zulily, ZU down 15%. FireEye, I think that's how you pronounce it. That's off 14%. Albany Molecular Research, got that out. AMRI, that's off 22%. Wynn Resorts down about $3, off nearly 2% out here. Auto Home, ATHM, down 5%. Again, our call number 877-927-6648. Remember, Stevie said caution, caution, a suspicious top that could be forming out here. So at this stage here, the cautionary signals are pretty good, aren't they? Dow's up 74. We'll see how this is going to play out. We really won't know, my opinion here, for the next 20 minutes or so, whether or not, again, and I really do believe what this is going to be is a real frustrating market for a lot of folks here for the next, at least the next week, maybe the next 2 weeks out there with a lot of sideways action. You know, some giddiness for the bulls and then some giddiness for the bears, all to really result in just really a sideways trading range, sometimes the most difficult to trade out there. Let's go back to the markets. We were taking a look at, not that we left the markets out here, but we were taking a look at the currency pair specifically. I'm going to go take a look at the Japanese yen for you. We took a look at the euro. We took a look at the Great British pound. If we take a look at the Japanese yen, what we're going to see is this thing has been just simply on fire out here. And I don't see the Japanese yen. I don't see it beginning to get to a level where it will pull back until it gets up to about the 116.11-ish area. You're already above the 1-to-1 A to B equals CD to the upside. You got above that on the third. You just kind of traded sideways yesterday, back to the upside here this morning. That becomes your next target level, the 116.11 area. If we take a look at expansions of swing points, the B to C is what I'm referring to. Let's see what we've got coming in here. You're already above the 1 to 1.618 level out there, so no reason for me to even use that for any additional measurement. So looks to me like the Japanese yen wants to get to the 116-ish range. Now, I believe the Japanese yen is numero 2, when it comes into the weighting structure inside of the U.S. dollar index. So now I believe it's like about 13%, somewhere right around there. But needless to say, this is going to be moving higher. That means it's getting weaker. The U.S. dollar index would be getting stronger out there. So that's what's going on in your three primary currency pairs inside of the market. Now let's go take a look at what's going on inside of the hard metals market. Let's go take a look at Goldilocks. What do we have going on inside of gold as we take a look at the December contract? Well, if we take a look at expansions of swing points here, that means we would go to the October 6th low. That price point out there is at 1183.30, all the way up to the high that came in here on October the 21st. That high is at 1255.60. Guess what? We are at the 1.618 expansion level. That price point exactly was 1138.60. We saw a move down this morning to 1137.10. This is a fairly significant level of support, or should be a fairly significant level of support inside of gold. If gold breaks through that area, it'll resume its A to B equals CD to the downside out here and should get down to the 1106 area. Gold has gotten to the extreme oversold territory. I do believe that. I don't know how this is all going to play out. Of course, you're maybe tired of hearing me say that, but you shouldn't be, because it's going to be amazing when we see this thing play out here where gold just simply takes off topside. The U.S. dollar index takes off to the downside out here, and that'll hold true for silver moving topside and light sweet crude as well. So right now we're up against a potential support area. We'll see how this plays out. On an intraday chart, there's nothing bullish that I can find out here, I don't believe. Let's go take a look at a 30-minute chart just as an example out here. I don't think we're going to see anything of any kind of significance. Nah, there's really nothing. Well, I take that back. Ooh, I do take that back. I do take that back. on the daily chart, thanks for asking me to do that, by the way. When we take a look at the daily chart, we saw that we were in the extreme sold condition. Well, interestingly enough, inside of the 30-minute chart out here, price moved lower, and it did it with less relative weakness. So that last thrust down, that was between 6:30 and 7 o'clock this morning, that last thrust down where we saw price with volume, with some pretty decent volume, by the way, we saw price get down into the 1137.10 range. It actually formed a nice bullish engulfing candle right here. That was on the trading session here between 8 and 8:30 this morning. So very, very interesting. Who said that? It wasn't Schultz? That was Colonel Klink, was it not? Who I haven't seen a Hogan's Heroes 30-minute sitcom for some while. Hey, so the 30-minute chart out here is giving us a potential bottoming formation. I'd like to see an A to B equals CD to the upside out there to give you that indication. So I think it's really important to watch what has been overdone, and that is the metals market, and that is gold. Now let's go take a look at high-ho silver out here, off 60 cents this morning. And as we take a look at that, it's trading out at 15.34. And I'm still on the 30-minute chart out here, and it has a similar pattern where price has moved to lower lows, done it with less weakness out here. And as far as the bullish reversal signals, not really when I take a look at the candle structure out here. So nothing really to blow our skirt up when we take a look at this silver. But we'll keep an eye certainly on gold. If I take a look at the daily chart, let's go see what the daily chart for silver, see what it looks like, try to get a feel for where this thing is pushing down into. Remember, we took a look at expansions of swing points earlier inside of gold. Well, the 1 to 1.2728 to B equals CD down says 14.59. So far, the low inside of silver has been 15.12. If I take a look at that expansion of swing points, I don't even know if it's really worth doing. Nah, I'll do it anyways. What the heck? Because there just wasn't much movement between the low from October 3rd to the high out here. Yeah, so that was really the reason why I wanted to say, nah, not that interested in taking a look at it. So, okay, so that's what's going on inside the silver. I think it's Goldilocks that we want to really be paying attention to out here for any potential. Let's look at light sweet crude. Light sweet crude. She's up 20 cents right now, trading out at 77.40. Really trying to put this together with regard to the U.S. dollar index. That means we have to take a look at what's going on inside those currency pairs and what's going on inside the metals market. Inside of light sweet crude out here, she has made the 1.618 expansion of its set of swing points, and that's the set of swing points. That's a good set right out here. That's the January 13th, January 14th, January 13th low, all the way up to the high out here. Looks like on June 25th, June 24th out there. So you made your 1.618 expansion. That says you've got a butterfly pattern out here. The question is there any kind of reversal signal? And the answer is no. But what is interesting, it doesn't show so much on this chart, but it'll show on this chart more clearly when I bring this up. Now, this is what we have on our screen here is the December contract. I'm going to put the continuous contract up on my screen out here. And what you can clearly see is we can see that, what I can clearly see, what you now can also clearly see is we can see that price had moved lower, done that with less weakness out here. And today would be the day, yesterday was not a hammer candle. Today would be the day where you could get a bullish reversal signal. We don't get it today, you can get it tomorrow. And it'd be pretty easy to get it today. All that light sweet crude needs to do today would be to close above 78.22, and that would give you your bullish reversal signal. And I would say it would be worth taking another shot across the bow and maybe taking a long position inside of light sweet crude. Again, you want to go back and see what's going on inside those currency pairs as well. But that's what's going on inside of the commodity sector. Not all the commodities. Let's go take a look at natural gas out here. Let's see what the natural gas contract is doing, up about 3 pennies at this stage here. It's given back its significant gains from earlier this morning. This blue line out here, 4.255. That is your strong resistance level. Actually, you got what could be the formation of a little bit of a shooting star. That's a shooting star as we speak right now. What does that say? That says that we ought to see natural gas pull back and setting up Now, I don't know if it's going to be a straight line pullback. I don't know if it's going to make an A to B equals CD to the downside. But what I would say is that if we can see light sweet crude, if we can see natural gas pull back to 381, that would be a nice trade entry in here. We take a look at retracements now from low to high. It may just simply be the 405 level. So 3.885. 3.816, 4.05. That really becomes the areas where one should be looking to go ahead and get long. Texas, no, this is not Texas T. This is natural gas out there. Natural gas. Now that is there's a guitar tune. Is it natural gas? It's the one when I was a young kid. Not that I'm not a young lad right now, but not that young. But as I was a young lad, I tried playing the guitar. Got guitar lessons, the whole thing. The one song that I could play wasn't a song called "Natural Gas" out there. Wasn't that the song, guys? It was a great tune. It was one that I could play on my guitar out there. My guitar teacher, she was big into Elvis. I mean, big into Elvis out there. And she should have taught me how to play like Elvis, you know. I mean, in any event out there. Is there somebody that did? Tell me, is there some classical gas? That's it. Thank you, Joe. Not natural gas, that's what you get after you have green peppers. That's what Stevie would have. But classical gas, thank you very much, Joe D. out there. In any event, let's go take a look at let's go back to the markets out here, to the markets, meaning, so Stevie gave you the cautionary sign, okay? Not too shabby, huh? And we'll see how that plays out today. But if we come back and we take a look at the strong indice out here, yeah, I'd have to say that's a bit of a pop and a drop. We're now down below the 41.55 level. Now, I don't want anybody to think out there that what this means is that's it. The highs are in for the year out here. Not at all inside of that camp. We're going to be in this very frustrating consolidation zone out here for a while, and if I can just if you can totally take that in, you won't be so frustrated. What you should be looking for is a decent retracement, some kind of pattern on the way down out here. And look, everything can turn in a heartbeat, but all my signals are suggesting caution. It certainly wasn't a signal that said we should buy that open, out here inside of the marketplace. So at this stage here, that's a pretty big bearish engulfing candle. If I pull this back, we got 13 minutes left in this session, so that can reverse in 13 minutes. Will it reverse? I don't know. But if we do pull this back here, pretty decent size move to the downside candlestick-wise out here inside of the strong dog, inside of the NQ out here. So what does that really set up as far as where does price pull back to? Where could price pull back to? And that's an excellent question, and I'm glad that you answered me that question. And now what you're looking for is an answer. So let's see. Is there any way for me to answer that question? I'm going to come take a look at the 120-minute chart out here. So the thing is this just simply going to be kind of like an upper level-ish consolidation? And what you'd have to really say, because I expect the consolidation to go on for a period of a couple weeks out here, we probably get our first piece of information, not so much at the bottom of the box out here. Now, price, since we take a look at the 120-minute chart, this pullback here, interestingly enough, it's found support at that 41.46 level. That's that point of control. So that's a pretty decent level for the NASDAQ to have to try to push through out here. And so what we should expect is kind of a little bit of a bouncing around here. That should be a pretty decent level of support. If it breaks through there, it's that 41.37 area. But because I expect this continued sideways movement here, and here's how I would really trade it. I would say that if these highs get taken out with any kind of conviction, then you just got your meal ticket to go ahead and jump on board and forget about the reason and the logic in what Stevie's looking at out there for the consolidation pattern, and because we can say that it's just going to ignore history out there. But if it's not going to ignore history, probably the next piece of information that we get is down around the lows of yesterday, inside the Qs, that is, inside the NQ, that is, that's down at 41.1975. If we pull this back further, let's go ahead and do this out here. I don't know if there's really a rising price channel that we can take a look at that has truly established itself. I'll tell you what, while we're at the break, even visually I can see that the answer to that is no. we'll take a look at just natural retracement levels. This is Steve Rhodes. This is TFNN. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's up 51. S&P is up 7. What's interesting here is during this 5 minutes when we were going away to commercial, we had the ES mini get down to 2012. 2012. If you caught the opening of the show, I said 2012, that's going to be your key level of support out here. Thus far, it is held. I'm always amazed at how that specific level works as support or resistance. It is simply amazing. Hey, let's go out to Lou in Nashua. Lou wants to talk about soybeans. Lou, how you doing this morning?
Okay, Steve, and you?
Excellent. Thanks so much for asking. So we've got the January contract for soybeans out here.
Right.
Tell me how I can assist you.
Well, I was looking to put a put on.
Okay. So if we take a look at the December contract here right now on the January contract, it's trading right into its TAS market profile support level, which I believe also happens to be the 0.382 retracement of the move down. So I'm going to come from the low out here from October 1st to the high that was put in on October the 30th. And it's really trading right just at about that 0.382 retracement. So if this is going to continue lower, what you want to see it do today is you want to see it close below $9.36. All right? And you're right now at $9.99 basically. So you want to see it close below that level. Then what you'd be looking at is you'd be looking for price to probably pull back into that 0.618 retracement level right around the 968 zone out there. What I will say is that you've got volume up here at the highs on this contract. So it does say to me that that October 30th level should see price move back up there, because the retracement over the course of the last couple of days has been on, a little bit lighter type volume. Yesterday, the number of contracts were about 118,000 contracts. Now, today it's up just a bit. You're at 116,000 contracts. It made that high with 205,000 contracts. So what this looks like to me, more like a classic textbook, that this is forming the C point of an A to B equals CD to the upside, and that C point ought to be formed right around that 968-ish type level. Does that help you out?
Yeah, it does, Steve.
Yeah, that's it. It did what it should have done, and I think when you called in the other day, you were also looking for a put position inside of this as well. Is that correct?
That's correct.
Yeah, and I didn't at that stage. I really didn't see anything other than the fact that it made the 0.382 retracement. I didn't see any real, which was a logical area for price to let people off the elevator, for people to start taking profits. Now then, we just kind of revert back to, hey, what's going on volume-wise on the way down? But when you trade these types of commodities, there's so many other things that influence the price, like weather patterns and things of that sort. And I'm far from a weatherman to even know what might impact that. So that's where I would. Those are the prices I would be looking at as far as where I believe soybean futures for the January contract are trying to move to.
Right. Do you have time to look at natural gas?
Yeah. Tell me what you're doing in natural gas.
I'm already long. I was long at 39.
Okay. So, if we take a look at what natural gas failed to do today, was it failed to get above a resistance zone. There's kind of like this little horizontal resistance level out here at about the $4.25 mark out here. And that's really the swing point from August 28th. That's the same swing point-ish range here from about October the 1st. It looks good. If you're in this for a long-term trade, this is where you want to be, is inside natural gas. But I would expect this to pull back as well.
Okay, great. Thanks.
Okay, you bet. Hey, folks, it's Wonderful Wednesday. Thanks so much for joining us. Stay tuned. The second hour of the Trader's Edge will be up next. If you're off to start your day, have a great day, and I look forward to seeing you tomorrow morning. Take care now.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.